Welcome to Idea to IPO. Hello, I'm Jennifer Stowell. Idea to IPO has been hosting tech startup events in Silicon Valley for many, many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 150,000 members among all of our meetup groups all across the world. We have organized, promoted, and produced over 2,661 events. By any standard, by any measure, we are the most active, most prolific startup event organization in the history of Silicon Valley, bar none. We organize venture capital panels, legal workshops, networking events, and more. These days, we are 100% online. We hold an event nearly every day of the week. Please check out our schedule at idea2ipo.com. At this point, I'm going to hand it off to our distinguished moderator, Jason Putnam-Gordon. Jason, take it away.
Hi, good afternoon from the San Francisco Bay Area. Thank you very much, Jennifer. It's a pleasure to be here. It's a pleasure to be with Idea to IPO. I've been doing events with Idea to IPO since 2013. We've got a great one for you today. Today, we're going to be focused on innovations in investment in autonomous vehicles. We have a fantastic panel who I'm going to introduce and also allow them to introduce themselves in a moment. But before we do that, I'd like to go over today's event and sort of the format. So for today's format, what we're going to do is we'll have the panel talk for about an hour. It's going to be a semi-moderated discussion. I've been chatting with these gentlemen ahead of time, and I think they've got a good rapport. So I think it'll kind of carry itself, which is great. Then in about the 1 hour mark, we're going to transition over. We'll allow folks to take or ask questions. I do ask that if you'd like to submit a question, and we'd love to get them from you, please use the Q&A function rather than the chat function. Chat's great for just kind of telling the room what's going on, but it's a little bit easier to track because I'm not only moderating, but also running the tech in the background if you use the Q&A function. Now, a couple other notes. Today's event is recorded. That's great because if you miss some or all of it, you'll get to see it probably in about a week or so. We'll send it to you afterwards. Downside is, you're not going to want to share any confidential information. So, for example, not only is this, a public room in one sense, but it's also going to get reported for posterity. So please note that. In the meantime, what I'd like for folks to do is, if you can see, we've got an audience survey up. It's really helpful now that we're in the virtual world, if you can kind of tell us where you're at, where you are geographically, kind of what kind of company you're at, so we can steer the conversation to kind of benefit the most number of people in today's audience. Now, as I said before, we've got a great panel today on autonomous vehicles. We've got Alex Lee from Modern Venture Partners, Martin Ruggier from Hella Ventures, Jeff Peters from Autotech Ventures. I'm going to let them tell you a little bit about themselves first, but let me tell you a little bit about myself. I'm Jason Gordon. I'm a venture capital and emerging growth company attorney. I'm with Paulsonelli here in the San Francisco Bay Area. I work with startups. I work with VCs as they deploy their capital. I love autonomous vehicles. I work with a number of those companies. No one else wants to hear about me. So let's turn it over to, maybe we'll start with Jeff. We'll go around the horn in kind of in a clockwise direction. Jeff, please tell the audience today who you are, a little bit about your background, what is you're looking for in terms of investment, where you the space that you play, and maybe also what's the best way to contact you if folks want to reach out.
Absolutely. So thanks for having me. I'm Jeff Peters. I'm a partner at Autotech Ventures. There's two unique things about us. One is that we exclusively focus on transportation-related technology. So that includes manufacturing, supply chain, logistics, everything around your vehicle over its entire life cycle, mostly early stage investing, Series Seed and Series A, but we can participate later. Which of course includes autonomous vehicle technology, where I've led investments in autonomous vehicles, but primarily on off-highway vehicles, so in construction, mining, agriculture, et cetera. The other unique thing about us at Autotech is that majority of our capital comes from large transport corporations, so car makers, truck makers, their suppliers, dealership groups, repair shop chains, energy companies. And that's our value add to any entrepreneur is, hey, look, we can connect you to all of our LPs, but also everybody that we know in the industry along the way, because that's our dedicated focus. My own personal background is aerospace engineer originally, worked for Northrop Grumman Space Technology for a couple of years, went back to school, PhD in operations research, and some of the underlying foundations of machine learning. And then I did a postdoc at Stanford before joining Autotech for our first fund. Yeah, that's a little bit about me.
Fantastic, Jeff. We're excited to have you here today, along with Alex. Can you tell us a little bit about yourself, where you invest, and how to reach you?
Sure. I'm Alex, principal here at Modern Venture Partners. You can reach me via LinkedIn or Twitter, or anything's easy. In terms of our firm, we're an early stage fund based out of Menlo Park. We invest across seed to Series D startups, and we look at a range of industries. I personally look at a lot of early stage investments across AI, ML, robotics, transportation, IoT, enterprise SaaS, and fintech, so fairly broad as well. Yeah, I made a few recent investments in transportation. So one company was called Skyways. They do autonomous cargo delivery drones. And the other one is one of Jeff's investments, Hayden, which is applying AV technology to traffic law enforcement. Prior to MVP, I worked at a few self-driving startups. So most notably Cruise, which is a San Francisco startup owned by GM. So I was on the strategy and partnerships team looking at autonomous delivery strategy. And then also at Voyage, which is a Palo Alto self-driving startup. They're focused on deploying in retirement communities as a first use case, and they were recently acquired by Cruise. And last but not least, I used to work with Martin here at Apex. So he used to be my boss. So, we go a long way back. And I'm extremely excited about the space and the potential for this technology to transform the way we move, work, and live. So having worked in the space, I think I like to think I know what to look for and what to avoid. So yeah, excited to be here today.
Terrific. We're excited to get your thoughts and to hear what you have to say. Martin, would you share with the audience a little bit about yourself and the space that you play in?
Yeah, for sure. Hi everyone. So my name is obviously Martin, and I'm a principal at Hella Ventures. Hella is a German automotive supplier, one of the I think top 30 to 40. So not one of the huge conglomerates, but a mid-size supplier that's focused really on two big segments. One is lighting technologies, so basically all the fancy lights that you typically see in higher end models, and then also automotive electronics, from advanced sensors that end up being heavily utilized for advanced driver assistance, but also autonomous driving applications, to things like battery management system electronics. Hella, like I said, is a German company, and we have a small investor team here in San Francisco. We invest off the balance sheet at the pace of $10 to $20 million per year. Stage wise, we look at anything from Series A to Series C. We've recently gone a little later stage. And we really see ourselves as an industrialization and or channel partner, and a value add investor that brings the corporation Hella and its capabilities to the cap table, along with obviously the money that we deploy. My previous background, I started my career at Daimler, at Mercedes in Germany. Have worked on the M&A and strategic finance side in both the trucking and also the Mercedes-Benz cars division. Then came over here to get my MBA. Have worked since then actually at Autotech for a while, which is where I met Jeff. Then started working for a startup called Apex AI, which is where I met Alex. And been with Hella Ventures now for about a year, and have looked at a couple of areas that are certainly tangential to the AV space. We don't do anything that is actually full stack AV companies, but we focus on enabling technologies, for example, as I mentioned, sensor companies.
Well, terrific. I'm delighted to have you all here today. Let's figure out who's in the room first, and then we'll kind of pivot over back to the conversation. So taking a look at who's in the room, we've got about 31% in from the Bay Area, a handful from elsewhere in California, 20% from the US, 22% from Europe. I'm going to share these results that you don't just need me to read them. And some folks from somewhere else. And again, because this is recorded, and if you've signed up for it, lots of folks will see this, in a time shifting capacity. So we've got about 40% of the room of first-time entrepreneurs, got a couple serial entrepreneurs in the room, some folks at earlier growth stage companies, and some large corporates and some angel investors as well. So pretty exciting. So one of the things I like to do on these panels, just starting off, is to just understand the sort of landscape of what we'll be talking about today when we're talking about autonomous vehicles. So maybe I'll start with you, Alex. Just kind of talk about, within the realm of autonomous vehicles, what are we talking about? Are we talking about, land terrestrial vehicles? Are we talking about, aquatic vehicles? Are we talking about aerial vehicles? Where's the conversation going to lead today?
We can take the conversation wherever you'd like. But for me, I'm a equal opportunity investor, right? So I like to define autonomous vehicles pretty broadly. For me, I'll look at any vehicle that can operate without direct human supervision in any given domain. So, like I said, I've invested in aerial vehicles for cargo delivery. I've looked at trucks. I've looked at last mile delivery. I've looked at ride hailing. I've looked at autonomous trains, lawnmowers. Anything short of an elevator, I'll look at. But I'd say, for the purpose of this discussion, if I were a purist, we talk about either an L4 or an L5 autonomous vehicle system, which is something that can operate in a structured environment without human intervention. So something like being able to take the steering wheel out. But I'd also be happy to talk about, L2 or L3, driver assist systems as well, because I think from my perspective, it's more around what are the technologies around this autonomy space that can, change the ways we live. And I think so for that purpose, I'd, happy to have a broader discussion. But curious what Martin and Jeff think as well.
Yeah, our scope at Autotech is limited to ground transportation or ground vehicles. So I'll dismiss or I'll defer to Alex on submarines and boats and planes and Mars rovers and everything else, and have my feet squarely on the ground. But that includes cars, trucks, specialty vehicles, vehicles that operate off the highway. So in construction, mining, ag, warehouses, that is all part of our domain because there are ground vehicles. So certainly something I can comment on. The former life, I guess you could consider satellites as autonomous vehicles, but I'm not making investments into that space currently. So defer on that one as well.
Yeah, and I agree. Like mostly with Jeff, we are more focused in that we also mainly look at automotive, or at least automotive related technologies. That said, the kind of sensors, the lidars, radars, etc., that find application in these vehicles, they certainly can also find applications in anything that Jeff mentioned. So from mining and off-highway applications, where you still have vehicles with wheels, to planes. Not sure about anything submarine, but there's autonomy in the broader sense is obviously a much bigger space than are just autonomous and automated cars. But my guess is, for the sake of this discussion today, Jeff and I are at least going to focus on anything with wheels.
Yeah, we're sort of myopic in that way, given our focus. But it is kind of interesting to see the history of autonomous vehicles, or at least I should say his interest in autonomous vehicles in Silicon Valley, at least, where you have autonomous cars generating an enormous amount of hype and buzz and a bunch of companies and interesting exits as well. From a financial perspective or company building perspective. But now we're seeing more of the spillover of that technology into other sectors, sort of back into areas that already had some autonomous vehicles already. So in warehouse, we've had roughly autonomous vehicles in the warehouse for a long time. We've had autonomous, Caterpillar mining trucks for a very long time, but we're seeing the new technologies developed for passenger cars spilling over into these industries and kind of moving those industries forward. And for us at Autotech, at least, we see kind of a long pathway towards monetization, at least for passenger car AVs. So we've been turning our focus a little bit to other ground vehicles where we can deploy the technology being developed at a much faster commercial timeline.
I think that's a great place to start. If we sort of pick up there, and maybe you could, and it sounds like we've kind of all congealed around, the space we'll be talking about today. Although, Martin, I thought, I saw in your bio, you're a diver. So I thought maybe the submersible thing would appeal to you. But aside from that, can you talk a little bit about some of the technology that you've seen kind of cross back over from, the automotive space in making it over into sort of commercial applications and what you're seeing there and what's sort of maybe driving some of this?
Do you want to take this one, Jeff? I'm happy to go first as well.
Oh, yeah.
Or if you can, I understand sometimes you can't talk about certain things.
Why don't Alex, you take it?
Yeah, I can talk about an example. One of my recent investments at Hayden AI. Jeff knows this company well. So in my mind, they're applying autonomous vehicle technology to solving a adjacent problem, right? So what these guys are doing are they're taking camera devices, basically, they're putting them in public transportation fleets like buses and police cars, etc., and they're using it to enforce traffic lane laws. So a lot of the core technology, whether it's computer vision, 3D mapping, etc., are things that have been developed and matured, with the AV autonomous vehicle kind of investment cycle, and they're taking that and using it in a much more slightly a tangential kind of use case. But I think at least my hope is they have a faster and bigger commercialization opportunity. So that's kind of things that I look for as you think about automation. Other domains like trucks or middle mile trucking, etc. I personally like to invest in kind of instances where you're taking that technology and using it in a much easier domain. So Voyage is a great example, right? The core thesis of Voyage, which is the autonomous vehicle startup I was at, they wanted to deploy in retirement communities first. It's still ride hailing, but it was a much easier problem to solve because in these communities, cars are traveling under 25 miles per hour, and therefore you could make the problem much easier. I think that's in general, those are some of the applications, but there are plenty more that I'm sure Jeff and Martin can also speak to.
Yeah, the areas where we focused are just different sectors where they've already deployed autonomy in sort of a highly standardized way. And now you're just taking technology developed for passenger cars that's more complex or can handle different environments through vision and machine learning applied to vision technologies to actually sort of augment what those vehicles can do through new technology. And I think what's important to realize when making the investments here is to focus on the use case and the commercial use case as opposed to the actual technology. So if you're looking at a sector, whether that's the GovTech with Hayden, which Alex described, or you're looking at mining or construction, it's like what do you need done, and can technology deliver that? When you look at it through the use case lens, there are a bunch of really interesting commercial applications that are now enabled by technology developed for AVs, for sure.
I want to just underscore what you said and sort of maybe even sort of flesh out a little bit more concretely for the audience. I mean, the reason why Jeff's talking about not focusing on the technology and not necessarily focusing more on the use case, at least generally from the VC perspective, I'm saying this out loud so you all can criticize me or correct me if necessary, is that, by and large, it's about, commercializing technology and getting a return on it within a certain window or period of time. And that's going to be sort of my shift for you guys to talk about what that window and period of time is, both from a financial investor perspective and also from a strategic investor perspective. But, it was interesting, like, as I was hearing you talk about this, Jeff, a bit, it sounds like, because you're taking technology, the automotive industry has been able to further develop a bunch of autonomous vehicle technology. You're kind of taking that back over to, an area where autonomy was already applied, but making it even better, sort of de-risking it, making it more commercially viable faster. It sounds like, gravy, from what I understand of the VC perspective.
Well, just to point out, there's two ways to invest in my mind. There's probably more ways than this, but two ways to invest in AV right now. And one is what we're talking about now, and that's look for commercially viable use cases, sort of geofence, controlled environment where you can deploy these technologies in a real way fast so that you can deliver on commercial success and revenue and build a meaningful business. That's where we've concentrated on auto tech, but we can't dismiss that there's also value in investing in the technology itself to create a very interesting asset that some other strategic purchaser might want to buy, which is kind of what Cruise was. Cruise today still nowhere near actually generating a dollar, but they had a meaningful exit, and from a venture capital perspective and founder and employee perspective, $1 billion or whatever it was at the end of the day. They created an asset without any sort of hope for commercial traction in the timeline that they were looking at, because it was a very interesting asset that was very interesting to a strategic buyer, in this case GM, who saw that in the future they need to understand this technology and they're willing to buy this asset so to augment their strategic vision. And if you look at a lot of the passenger car AV full stack companies, whether that's Cruise or Zoox or Voyage or Argo, they are building an asset at the end of the day that could be acquired by someone else. Is at least how it's unfolding today. And that's another way to invest, is just we at Autotech and myself personally are a little bit more interested in building on commercial success, which necessitates us to look away from probably the passenger robo-taxi use case into something with a shorter timeline.
I like what you're saying there in terms of one, go to market structured use case, or two, tech that can be licensed. And the third thing I'd add is investing in the AV tooling ecosystem. I think you're seeing a lot of companies like Applied Intuition, Scale.ai, which does the data labeling. I think DeepScale, one of your companies, also sold to Tesla. But there's a lot of tooling that's needed around this industry, and I think that's actually where you're seeing a lot of the financial investor interest. And I think as you think about investing in this space, that's also a third bucket that's really interesting, at least to me personally.
And Jeff, I'd like to add something around, I think there was the second point you made there. I think none of the entrepreneurs that started the companies like Cruise and Argo and I don't know, well, Lyft Level 5 is, I guess, the most recent example of an acquisition of a full stack team, right? I don't think none of these teams were founded with basically the goal in mind to one day be sold to in most cases actually an OEM, right? I think and maybe that's just my way of thinking about it, but I think the drive in entrepreneurs to found a company is always manifests itself in kind of this vision to actually make this work and to see it through. And I think what we've seen though is that the timelines were shifted out year by year, people were saying, oh, it's another, 3 to 5 years. That seems to be like kind of the answer that you get more. And as time went by, a lot of the, for the investors, that's a different story. But then also for the startups, it just became a question of, hey, what strategy is going to get me to that goal? And if I run out of money, then obviously, or I need a strategic partner that has deep pockets and that will maximize my chances to get to that vision, right? Those things kind of evolved over the last couple years, and we are now at the point where like the consolidation, to me, like the consolidation flywheel is in full swing, really, in the industry, right? There's not, at least I haven't seen any. There's not really any new full stack AV companies coming out anymore and kind of raising their Series A round. The existing ones are either so big already and have several partners that they have billions of dollars to work with, right, and access, or they, mostly get bought up and either integrated into larger technical teams at some of the big players, or they become the autonomous vehicle bet of, like, let's say an OEM. And I think the acquisition of Lyft Level 5 by Toyota, that was like just, I think, a couple of days ago, right? That is one of the most recent examples of that development.
I think some entrepreneurs, and maybe some folks in the audience, will correct me later, that there were entrepreneurs that looked to build an asset with no idea to build a long-lasting company in the space other than to have a nice exit. From my experience, Lewandowski, that's be a great example, the extreme example.
No, that, I mean, I think that's fair. Well, can you, so Martin, if you've, if it's been your observation that sort of the consolidation flywheel has sort of started, what kinds of, and certainly yet there is still plenty of opportunity in this space, I think, and probably even more opportunity than before, potentially, right? As some of these platforms get built, where are you all seeing those opportunities to play, or or what seems kind of interesting these days?
Yeah, I'm happy to speak to that. So I just did YC a couple of weeks ago, and believe it or not, there's about 5 or 6 self-driving autonomy startups still coming out of YC at seed stage these days. So I think the enthusiasm definitely is still there. What I'm seeing, though, is more structured use cases to the first instance that Jeff talked about. These folks are either building autonomous street sweepers, middle mile trucking, kind of Neuro-like last mile delivery devices, vehicles. I think most people have realized that trying to build another Cruise or Waymo or Zoox is just pretty insane, and we've seen how many billions go into that. And I think the reality is financial investors just don't have the appetite to sign on to such a long journey. So I think as entrepreneurs think about this and they're learning from past cohorts, and it's around how do I identify a very targeted use case, whether it's inside warehouses or in a train yard, hauling trains around, that can get me to commercialization faster. And that's something that, as an investor, you can feasibly believe there'd be an exit within 5 to 7 years. So that's one bucket I'm seeing a lot of. And the second piece is around the tooling. So, folks building data labeling startups, because you need to develop the core computer vision, prediction algorithms for autonomy use cases, whether it's a startup or whether it's a large OEM, they all need to develop this technology. So building tooling for that, I'm seeing a lot of. But yeah, definitely still a healthy pipeline of autonomous vehicle startups coming out of places.
Yeah. Martin and Jeff, any other observations? Or I'd like to also, I'd love to get if not, I've got another question, but I'll pause there first.
I totally agree. I don't have really anything to add, but yeah, the application of AV technology to other vehicles with bounded use cases that are big enough. There's so many out there. I mean, like what Alex mentioned before, like lawn mowing and, you know, apple picking and strawberry picking and, you know, everything under the sun out in the fields. Construction, several in construction, warehouses. I mean, there's probably 6 or 7 different autonomous forklift projects going on right now, in addition to some of the legacy providers. So there's sort of a flood of folks coming from, you know, good AV pedigree backgrounds, chasing other opportunities that they think that they can deploy faster in a less competitive environment, requiring less capital. And yeah, echoing the tooling, I mean, I think, you know, the tech companies certainly were developing their own machine learning tooling. So, you know, data labeling or data collection, labeling, building the models, compiling and compressing those models onto actual hardware and iterating and building all the infrastructure in order to do that. You know, like Google and Facebook have been doing this for a long time. I think AV introduced a new market that need to do that at sort of kind of building from scratch in a lot of ways. And we're seeing a lot of people who worked on those projects spin out and have more generic machine learning tooling and computer vision tooling with sort of the pedigree that coming from, you know, autonomous vehicles is pretty interesting, because now they're not only serving the AV community, but also a bunch of other different use cases that might be faster moving or more dollars at the end of the day. One example, you know, Alex mentioned this too, we were investors in DeepScale that was doing sensor fusion and low power, low memory, edge AI for automotive. And they sold to Tesla. And then we immediately invested into 2 other companies in that same type of space, doing low power, low memory, edge AI, because it's applicable not only for, you know, resource constrained device like a car, but also in cell phones and other personal electronics and drones and things like this. So one was XNOR, which Apple bought. And then we have one that's currently active called Latent AI that it's a machine learning tool. Their special sauce is that they take a pre-trained model and compile it and compress it on a cheap piece of hardware. But the origins of this and the needs of this, I think, were partly driven and motivated by autonomous vehicles and the ability to detect things using just machine vision and the need to put it on, you know, resource constrained devices. So
yeah, Jason, one good metaphor that, you know, I actually like a lot is to look at how the automotive industry from its very beginning, you know, more than 100 years ago evolved, and then compare that to what's been happening in the AV space, right? Because if you look at, like, let's say the Ford Model T, I think it's what it's called, right? It basically, Ford made everything from the seats to the
Sure.
steering wheel to the powertrain and like the windows and, you know, everything, the lights. And so then what we've seen slowly but steadily happening is more of like a specialization, and then the tier 1 suppliers evolved, and now, you know, there's only a limited amount, like a certain number of seat manufacturers, for example, right? And they provide seats to all the major car
Sure.
OEMs, and as we all know, the OEMs are really system integrators more than anything else. They build the chassis, but I would even say that system integrators in a lot of instances are also the tier 1s, right? That I don't know, that put together the full dashboard, for example, and you literally just plug it into the chassis. And so in some ways, that is what, you know, the AV industry, where they are in that kind of process of evolution, in my opinion, is really in that early Ford Model T stages, and now slowly evolving towards the specialized world, where there's players like Applied Intuition that, you know, does simulation and all parts of the software stack, right? That can be basically taken out, and covered by one specialized player or multiple, they probably will be, just because it makes sense, right? And it remains to be seen how much of that is going to happen in actually the software world.
Mm-hmm.
But the early full stack AV startups, and that's what I meant really when I was talking about it earlier. They basically just said our goal is to build, autonomous cars and disrupt transportation globally, right? That's a pretty big vision. And so even the fact that there's now very niche applications, I actually didn't know that there's like street sweepers and I mean, I knew about lawnmowers, etc., right? But that to me is also just a sign that there's more specialization happening, and the stack is basically, disintegrating, or you can take out certain components, and if you become really good at providing one of those components, you can potentially build a bigger company than if you just try to solve the whole thing with limited resources yourself.
I would argue a little bit against that, actually. So I agree for some components, something like a data labeling, maybe simulation. But there's a lot more that goes into simulation than just AV simulation, or what a lot of these startups are currently doing. What I've observed, and I don't know if it's true, and my interpretation might not be true, is that you saw a lot of full stack companies enter the space, and then you saw some of this disintegration or unbundling of that, where you had folks like DeepScale doing sensor fusion and algorithms for edge AI, and they'd say, oh, that's all we're doing, nothing else. Tell us what chip you're using and what sensors you're using, and we'll figure it out. And then there's sensor companies that were just providing the sensor, and then there's the compute companies just doing the compute. But from our experience, at least, we haven't seen too many of those single layers drive a tremendous amount of value or get a tremendous amount of traction. And one thesis is that all of these components are so tightly integrated in an autonomy stack that it's very hard to rip something out and replace it very easily. And I think going to the automotive example, my argument here is kind of, well, you need a tightly integrated system. You need to control what's going on in your autonomous stack, everything from the sensor, how it's fused to a single view of the world, how that's computed, where that's computed, either up or down the stack, what you're transferring, back to the mothership for further training. How do you ensure the quality control of software updates given your stack? All that's so tightly integrated that we may see a rebundling within the automotive industry, where now you'll see the top tier ones, like the Contis, the Bosches, the Denzos, providing an entire subsystem of control, perception and control to an OEM. So they're taking care of everything, because now it requires, with autonomy or even ADAS, it requires a tightly integrated system with where the radars, cameras, calibration thereof, the compute, the Ethernet, all have to work in concert with one another. And you can't have as much specialization as in the past, or maybe they just become integrators and you still have a layer of specialized, folks that are feeding into that system. But I see a little bit more of a rebundling happening, and that's why you see full stack AV, but just in different markets. The tooling, I think, works if you can provide something generic enough that's useful across a number of different industries. But just a counterpoint to the unbundling idea or specialization idea.
I mean, it's interesting you say that, because I also had the same school of thought as Martin, because that was the core thesis of the company we worked at, Apex, right? Which is, hey, provide a middleware layer that you can plug any piece into. I do know on the software side, the integration is much more difficult because the stack is so tightly bound together. But on the hardware side, if you think about NVIDIA with the compute for the vehicles and the LiDARs and the radars, I think you are seeing a little bit of unbundling. I think the classic example is Waymo. I think they basically had to build their own LiDARs, right, when they first started the project. And now, you have a lot of folks like the Cruises and the, Argos of the world using third-party, hardware being able to catch up on that piece. So I think it's fairly nuanced. On the software side, the jury's still out, but I think on the hardware side, seeing a decent amount of third-party providers being able to come in and deliver value in that sense.
And interestingly, that's actually the same thing. I mean, I'm not an expert at automotive history, right? But I think you saw waves, and it kind of has to go back and forth for a while, right? There's been phases also in just traditional automotive where, you know, OEMs insourced certain parts or certain processes again, and then they outsourced others. And like, I think this is going to be an evolving kind of dynamic. And I think we are seeing on the sensor component side, I think we are definitely seeing this integration happening. And on the software side, as mentioned, it's hard, right? And it remains to be seen, like, what you can take out of the stack and what you want to own and control in-house. But I'll go ahead.
I was saying there's an entire VC investment philosophy that, you know, any sector goes through this bundling, verticalization, and then unbundling, and then bundling and unbundling. And as long as you know what's happening, whether it's bundling or unbundling, you can make good investments and start great companies. It sounds like there's still some ambiguity of what's happening in the AV space.
Maybe it seems an inflection point on that, but we love sort of a robust, healthy counterpoint discussion. So thank you, gentlemen. That was great. One thing we've talked a little bit about today and talked around is sort of the financial investor perspective in this space versus maybe the strategic investor's perspective. And I was wondering, obviously each investor has its own perspective, right? Each individual investor has its own perspective, but kind of speaking maybe broadly at first as to, you know, how that's sort of shaking out or trends with regard to each in this space would be great. And then any specific perspective that you have is also very welcome. Open floor for whoever wants to start first.
Could you repeat the question a little bit, or say
sharing generally, like if we could kind of cover the strategic investor's perspective in this space, and also like in contrast or in comparison to the financial investor's perspective. What are they looking for? What are they interested in? What's the time horizon investment? You know, we talked about some of these things in terms of, you know, sometimes financial investors are kind of more motivated by the ability to kind of commercialize and get that return a little bit sooner because they've got constraints from their LPs on the back end, you know, and they got to make sure that they get those returns, versus maybe a strategic has the ability to take a little bit longer term view or to develop sort of a market for their own products, those types of things.
Yeah. I can give the financial investor point of view, and I'm familiar with strategic as well, because a lot of those folks are investors in our fund, which I think is, you know, important to start off with. A lot of folks, I don't think necessarily appreciate that many VC firms have our own investors, and that we have limited partners that invest in us for a variety of reasons, but primarily for most firms, they want financial returns. We sell them on the Autotech sells them on our scope. So we think we have a unique differentiated advantage in investing in transportation technology. So we tell our limited partners, we are going to make you money at the end of the day by focusing on transportation tech, finding the best companies, adding a lot of value to those companies along the way. That's our pitch, and that's what drives us and motivates us, you know, to get up in the morning and find great entrepreneurs to work with. It's financial returns. That's if we weren't focused on that, we're not doing our fiduciary duty to our investors. So we're looking to essentially either generate IRR, which has a time component, so make the most money in as short amount of time period as possible, and ultimately, you know, have big multiples at the end of the day where our LPs invest $1 and get $3, $5, $10 back, if we're lucky, right? So when we're making investments, we're strictly looking from a financial return point of view. What do we what's the value that we're investing in? What's the valuation upon exit? So we need, and we want to see it in a reasonable time frame. Our limit is 10 years. We would prefer it as soon as possible, right? We're pretty myopic folks at the end of the day. So that's why we're looking towards folks that can generate a lot of value via revenue or commercial traction right away. However, we've seen with folks like Cruise and others that you can drive a lot of value through building an interesting asset to be acquired. Whether that was their intention or not, that's what happened. So that's the lens through which we view it. So it's more about, rate of valuation increases is the way that we look. We have no strategic point of view other than to make money at the end of the day for our investors.
I mean, we're a financial investor here at Modern Venture Partners as well. So that's how we think about it. The two lenses that I'll look at is one, how big is the market, right? So if I'm investing in a 50 million valuation today, can this start up 100x within the next, X amount of time before they exit? So you have to believe, one, that there's a big enough market that the startup is going after, and two, of course, that team is the right folks to capture that. And the second piece is the time component, right? So we do have to return the funds to our investors, within 5 to 9 years or so. So if you think about Waymo, I think the project was started in late 2009 or 10, and the team had been working on it since 2005 DARPA Challenge, or maybe even earlier. Like, it's been a good 10, 15 years now. And, it's tough to believe in that thesis of someone saying, hey, I'm going to build another full stack, level 5 EV startup that's going to serve people everywhere. It's tough to believe that there's going to be a exit within the next 6 to 8 years or so, unless they sell, as Jeff talks about, they're building a piece of technology that an OEM or another company would want. So that's kind of how we think about it. Pretty basic in that sense.
Yeah, and then to add the kind of strategic side, I think the way that I look at strategic investors is actually on a spectrum. I think there's strategic investors that are basically agnostic to valuation, return profile, whatnot, right? They make strategic investments as a means to build a closer relationship and kind of put a little more skin in the game for a partnership, etc., to get access to technology, you name it, right? But to me, those let's call them purely strategically incentivized firms will act somewhat differently than some, like a fund like Hella Ventures, where we see ourselves really as being equally financially incentivized, which we are as like the investment professionals, but we have another tool that we can leverage in order to make the companies that we invest in successful. And that is our that is this Hella as a corporate. Now, what that also means is that we cannot just invest in anything that we like, right? If Alex mentioned NFTs earlier, if tomorrow we wanted to invest in an NFT company, we could not do that, because it would probably be pretty hard for us to, kind of, explain the strategic fit and the potential there for Hella. But again, at the same time, the way that we really look at it is we bring something to the table that is for the few companies that we invest in can really have an outsized impact on the company's trajectory. And that could be access to, manufacturing capabilities, going through functional safety certification, helping with, going to market with OEMs because we have the established channels. And at the same time, we leverage that in order to maximize financial returns, because that is what we as individuals on the investing team are ultimately incentivized by. And I've found that this hybrid model is actually pretty interesting, in that, you know, the incentives are pretty aligned, at least, you know, in these kind of bilateral relationships. And we've also frankly seen that it actually works very well as an innovation driver at the corporate, right? Because again, we couldn't make these promises to startups if we didn't also deliver. And in order to deliver, we need to make the cooperation and the partnerships with the corporate work. And by doing that, you know, Hella actually does have advantages, and you know, gets basically new innovation into the door, and that's really the incentive from the corporate side. But again, I think the strategic investor space is a little more nuanced in kind of what the ultimate objectives are than the financial space, because financial investors, as Alex and Jeff mentioned, they're, you know, just greedy capitalists that just want to make a bunch of money.
It's pretty, we're simple creatures. It's buy low, sell high. It's pretty simple to understand. But Marin's absolutely right. We have about 30 strategic investors or corporate investors into our funds. So we make our own independent decisions, but, you know, they're investing in us for particular reasons. And some of them are like, yeah, go out there and make me money. And I'm glad you're investing in the space. Let me know if, you know, I should be paying attention to anything. But they want it to be sustainable by generating returns. But there's other ones that are like, you know, why aren't you investing in this, that, and the other? It's relevant to our product roadmap, and it'll be an add-on to like this one technology. And, you know, that's incredibly useful from a strategic point of view, but it just simply doesn't generate financial returns. So there are corporate or strategic investors out there that will be making investments to, you know, help a company along, get close to them, you know, not in a nefarious way, but to understand what they're doing, to learn, and you know, set them up and start a relationship for a potential strategic partnership or acquisition on the road. But, you know, those folks aren't going to be incentivized to have, you know, the 100x acquisition, which I think would have been at 5 billion in Alex's example. They're not really looking to buy high either. So, you know, there's a broad spectrum of strategic investors. Hella does an incredibly great job of finding great companies from a financial perspective, and delivering value to them. But there's other, you know, folks out there that are looking at it purely from a strategic angle as well.
So that was fantastic. Thank you. So we talked a little bit about how they're different or have different perspectives. Since we've got a virtual room that's basically filled with a lot of first-time entrepreneurs, you know, it's really not an either or path, right? I mean, oftentimes there's a blend or a mix in any kind of syndicate in terms of any round of funding. Can you share maybe how these two different perspectives come together in either an investment or in you know, in the life cycle of a company in this space? You know, how is it that you guys play together and can collaborate on this panel so well, basically, right? Because you're not working at cross purposes.
It's a good question. So our generic advice that we give to founders is, if you want to build a very large company, at the end of the day, you may consider, or you should take money from a financial investor at the earliest stages, that can set you up for success in the future. And in general, you should probably have financial investors that are aligned with your vision of building a standalone great company, in future rounds. But, you know, please augment in the later rounds, augment them with, you know, strategic investors that can give you a very unique perspective on how to grow your company, how to fit into the ecosystem, and how to, you know, if you're able to leverage a partnership, whether that's through Hella or some other, you know, corporation, that can be, you know, very valuable as well. We pride ourselves in being able to help transportation companies, but we're of no use in other sectors. And so if one of our companies is, pursuing ag or construction or mining, it's great to have smarter people around the table, and we would encourage them to bring strategic investors on to help guide them through that journey. But in general, initial stages of company take from financial investors or a syndicate of several corporates, so you're not steered in a particular direction.
Yeah, I see that quite a bit, and that's the advice I would give as well. I think earlier stage, you want a great financial investor who's aligned in the long term, and also there's a signaling piece to it, right? If you get a Autotech to lead your seed, or a Sequoia and Andreessen, it makes it, as bad as it sounds, it makes it easier to hire engineers, because folks know, hey, these folks have deep pockets, they can continue to support the startup, as you grow. And also it helps with customer acquisition, right? The first thing a large corporate would ask a startup is, are you going to be around in 3 years? And if I put your software in my cars and you guys are gone in 2 years, what am I going to do? So I think having the brand name in that sense helps. I would recommend, as a founder, think about how you want to put your cap table together. There's a place for the financial investors, but there's also a place for strategic investors who can add value, whether it's, to Martin's point, with introductions to manufacturers, customers, folks who have done this before, and can kind of give you advice on, hey, if you're building a LiDAR company, these are the things you should be thinking about. So I think there's a space for both, but I do agree with the piece that, hey, earlier in the rounds, in your fundraising cycle, we should be thinking about a financial. And the other piece is, and Martin can speak better to this, is it's unclear to me whether a corporate or a strategic investor would want to come in as early as a seed round or pre-seed round, right? Because at that stage, you may just be 4 folks in the garage with an idea and a pitch deck. And Martin can speak more to this, but I don't know if he'd be able to sell that along with NFTs.
Yeah, I mean, so it's interesting because the way that Hella Ventures has evolved, at least, in the beginning, we actually did make a couple of bets. That was before I joined, but we did make some very early bets. But the way we've positioned ourselves now, and based on the learnings that we've made, is, yeah, it makes sense to at least have some sort of product market fit, and to have more than a pitch deck and 3 or 4 people. Because otherwise you just can't really make the collaboration work, right? And there's that early, there might be pivots, and then the strategic fit is gone. That might also happen later, but the way we also position ourselves to get back to the question, and also what Jeff mentioned, is we, for example, never lead rounds. Right, and we're very specific in that too, in that we actually want a strong financial lead investor, and I think, Alex, you guys have a similar approach to that. Like, the thing is that certain funds compete with each other, but I think on the panel today we're actually pretty collaborative crowd. In that there's always syndication. There's always, most of the time there's more, you're going to add more than one investor in any round that you're raising, and what I've seen and noticed in the industry is that, yeah, even the big financial multi-billion-dollar asset under management funds, right, there are certain instances where they actually like to also just have the confirmation and to have that industry experience of like a certain strategic that can add a completely different set of value to the table. But that also means that, I also wouldn't recommend anyone to basically have Hella Ventures lead around, because as others have mentioned, it can send wrong signals. And what you basically don't want, especially in the automotive industry, that is still, it's a very established industry with a lot of big players there is a risk that, for example, if you're taking on money from like one OEM, that other OEMs might not want to talk to you or use your product anymore. And so the way that I've kind of handled that on the Apex side when actually raising from investors was to just raise from more than one. Right. So if you do take money from, let's say, an OEM, then try to get like at least 2 or 3 on the cap table so that you show the independence that you still have. But again, there's always exceptions to the rule. There are companies that are very deeply and like strongly aligned with just one OEM, and they're also not doing poorly. So I think in general, the recommendation is to find a strong financial lead when you can, and then think about who you want to fill up the syndicate with, and who you want around the board table, basically.
Well, those are great thoughts and points. And with that, we sort of close out this portion of our panel discussion. Before we really do, what I'd like to do is go around the horn one more time, have each of you just sort of recap who you are. If you've got anything you want to share with the audience, any points sort of in a 30-second, window, please share that. And then also your contact information. And then from there, we'll transition to the Q&A. Please use the Q&A function, not the chat. If you've used the chat, please move your question over the Q&A so we can see it and get to it. But maybe we'll start with you, Martin, in terms of, who you are, how to contact you, and any final thoughts that you want to share with the audience.
Yeah, so again, I'm Martin from Hella Ventures. Happy to be in touch with anyone that's really thinking about starting a startup, or ideally already has started one in really any automotive related spaces. Most recently, we've also looked at tangential spaces, so like industrial robotics, because Hella is also at the end of the day a manufacturing company. So manufacturing, IoT, industrial robotics, but then also those transportation related and ideally component related topics. Happy to chat, provide perspective, and look at companies that fall into that space. In terms of contact, I can put my email in the chat, or you can also just find me on LinkedIn.
Great, Jeff.
Yeah, so reminder, Jeff Peters, partner at Autotech Ventures. Our focus is transportation tech, but we also include manufacturing, supply chain, logistics, kind of for the same reason that Martin talks about. A lot of our limited partners or corporate partners make things and move things at the end of the day. We also look at, obviously AV technology, the context here today, but also dealership tech, repair shop, insurance, anything related to a car, junkyard tech, if that's what you are interested in, would be relevant for us. And our generic submission portal for any pitch that you might have would be founders@autotechvc.com. And I will also put that into the chat window. And feel free to submit whatever you have to that email address, and then we'll allocate it to the right partner based on what you're working on.
Right, and then last but not least, Alex, principal here at Modern Venture Partners. So, we are an early stage venture fund. We invest across seed to Series D startups, and we're fairly industry agnostic in that sense. I personally look at early stage investments in the AI, ML, robotics, transportation, IoT, enterprise SaaS and fintech space. And I have a soft spot in my heart for autonomous vehicle startups. I think, despite, I may be jaded from my experiences with, a few of them, given knowing how hard the journey is, that, I want to see founders succeed in this space, and I want to see founders build world-changing companies. And, I'm always happy to talk to and help out founders in this space, and others, of course, as well. You can contact me on LinkedIn, Alex Lee at MVP. If you search it, you'll find me. Otherwise, I'll also share my personal email in the chat as well.
Terrific. And I don't know if I'm having some bandwidth issues, which is a little odd because I'm hardwired in here, but we'll move to the question portion of today's discussion. So maybe first, one thing we've focused mostly on terrestrial vehicles.
Sounds like we lost him completely now.
Yeah. Should we just?
It sounded like a question for you, Alex.
I mean, we can pivot quickly and I can do the Q&A piece, but I'm guessing he was asked. Hey, Hey, Jason, you're back.
Hello.
Hey, we can hear you.
Well, maybe I can take his place for a little bit. So I think he was asking about, we've been focusing on terrestrial vehicles, seeing as I and Marin are extremely biased towards ground transportation. But you're not, Alex. So maybe you could talk a little bit about drone delivery, eVTOL, and those opportunities for autonomy in those markets.
Yeah, so I think eVTOL, for example, I think was a $2 to $3 trillion market. Frankly, I think it'd be game changing, right? If you think about ground transportation, you're operating in a two-dimensional space. So at some point, there's going to be a constraint on how many people you can move and how many goods you can move. You can always fit more people into a single car, but at some point, you're going to have to think about the dimension, whether it's going down on the ground with boring, or in the sky with things like Joby and all the other eVTOL startups. We've invested in a few. The challenge there is just it might be an easier technical problem to solve because there's not as many things in the sky right now, but there's a strong regulatory and airspace integration piece that is, I think, just as challenging, and it actually may make the timelines longer. So for me, having been at Voyage, and I like the thesis of having a very constrained use case. So the company I invested in, Skyways, they are doing autonomous cargo drone delivery, but they're starting off in military bases and defense because military bases, they have the rights to their airspace. And then the second piece is it's cargo delivery is better than human beings. So I think there's a lot of opportunity. We also invested in the space startup. So, we're not quite autonomous yet, but I think, transportation can be transformed in many dimensions, whether it's above ground, below ground, or in the sky, or even in space, exactly. But I mean, we can also look through the Q&A as well and do a quick.
Yeah, I don't know if you can hear me at this point, if I'm caught back up.
Yeah.
Oh, yeah. You're back. We can hear you.
Do I look live or am I kind of frozen? Because some of you folks are frozen here.
Right.
Why don't you guys keep running with it, and I'm going to see if I can fix this on my end. So you're doing great.
Thanks. I made a feature as a moderator.
I mean,
but yeah,
I have a question for you, Jeff.
What's that?
I have a question for you, but why don't you go first?
Oh, I was going to read. The question is, I think, directed at me from anonymous attendee, and that's, what would be your view and reading on the Toyota acquisition of Lyft? So Lyft was one of our first portfolio companies. I believe, and I don't have, they were exited before any of the level 5 stuff. So I can talk freely about it, but I don't have any special information. So this is just as ignorant of an opinion as everyone else is, perhaps. I think Lyft started the L5 program in response to Uber focusing on self-driving, seeing as that was their primary competitor. I personally don't think that strategically they were really looking to make autonomous vehicles in the long term, but rather be very smart about the technology and use that as a way to strike partnerships with the people that would be deploying those in the future, so that they could partner with Aptiv, now Toyota, with Waymo and everyone else, and know exactly what the challenges were when the technology was ready and how they could deploy, how they could use their autonomous vehicles on Lyft's ride-sharing network. That I think was the strategic play for Lyft. I think, so I wouldn't have ever considered them like the leading autonomous vehicle tech company out there or the leading asset available for acquisition. But it was strategically relevant for them at the time. Now that both Uber and Lyft are public, their priorities have changed where they actually need to make money, because that's what businesses should be doing eventually. And you saw Uber, get rid of their ATG, so their autonomous project. They got rid of their scooter business Jump. So they're shutting off some of these loss-making assets so they can actually show that they're becoming profitable for the public markets and those investors. And I think it was a decision that Lyft had to make eventually because they weren't going to generate revenue in the near term, and they have now near-term requirements being on the public markets to generate their revenue. So they also shed that asset, and Toyota bought it, or Woven Planet bought it. So that's my interpretation. But maybe some other folks have another unique point of view. Alex,
I
having
agree
gone through that process with Voyage.
Yeah, I agree with you. I think, one, just as a public company, it didn't make sense to continue, investing in that business if there's a very, very long payoff. But I think the other piece is Lyft's value is their platform and their, customers, right? I think to a customer, to an end user rider, I don't really care if my car is human driven or autonomously driven. I think Lyft's kind of advantage is they can dynamically, dispatch vehicles, whether it's autonomous or human. So I think having Lyft be a platform and having other AV companies like Cruise, Waymo, etc., today Emotional on their platform, and being that layer is actually more valuable than developing the tech themselves. And the other piece is, if they develop the tech themselves, then, if I was, a Cruise or a Waymo, I'd be concerned about putting my future of my company onto their platform because, Lyft is always a conflict of interest around, hey, why don't I dispatch more of the profitable rides to my vehicles versus a third party? So I think it was the right move. And that's also why you see Cruise and Waymo trying to own their go-to-market, because they know how valuable that customer relationship is.
Yeah.
All
right. That next question we have from Ivan Labra, if I'm pronouncing that correctly. How does the signaling behavior on AI regulation coming from the EU impact your view of the AI market and its relationship to mobility? To Martin, since he's from the EU.
Well, so I would have to actually need some more information on that regulation, because that's not.
I think there was some recent regulation on what was allowed, and it included a pretty broad set of technologies, including like Bayes' theorem or something like this. But maybe privacy concerns, things like this.
Yeah, I think that probably affects us as much as really anyone else that's looking at these types of solutions. We don't do a lot of AI only plays, like software only plays. The one thing that in our portfolio where I can see some sort of connection, right, is a company called Drishti that basically applies AI on the manufacturing floor. There's some privacy regulations and GDPR topics that we need to be that this specific company has to just deal with. But I think I think privacy is also a different topic than just enabling or thinking through what to allow in terms of AI, period. And I think we're really just at the beginning, certainly from the regulation standpoint, at the beginning of that kind of cycle where regulators and policymakers are, you know, making those judgment calls on what is good and what is not. But again, I'm not in any way like really following this space closely, because it's just not that relevant to us.
Yeah, I think most of us here probably focus more on, verifiable use cases, like, is this a defect or not a defect, as opposed to like hiring and does this algorithm have bias or personal privacy at the moment, at least. That's kind of my point of view. It doesn't come up too often at the moment, but it may certainly in the future.
Thank you guys for handling this autonomously, by the way. I mean, it was sort of a test, if you will. I think I'm back, which is great. Good to be here. So I think I caught some of that. I guess we've got some questions. It sounds like, maybe this is kind of outside of your wheelhouse, because it's sort of outside of what you think about on a day-to-day basis. But what do you all sort of see big picture in terms of, because I think we've got at least maybe one person with a PhD in econ. Is that right? The societal implications for autonomous vehicles and the sort of shift in human capital and labor, and kind of what some of this means, for our social system moving forward. I mean, it is a perennial question, this time asked by Anonymous, but what are the societal implications, and do we need a universal basic income? Every time I do a panel, certainly about autonomous vehicles and about AI, this question comes up. So it's a tough one to answer.
Yeah.
Your thoughts would be appreciated.
Well, I'll caveat this with that I'm not that type of economist.
Okay.
Most of my education is more in engineering and algorithms than anything else. But I would say that, I need to answer this because of my background. But, technology's been happening for a long time. I mean, and it was like the Luddites that protested because the loom to make clothes faster, so that they were going to put all these sewers out of business in England, and they protested and destroyed all the looms. And I don't know, I think the UK has done okay since then. So there is a shift of labor. I think fortunately for the labor force, AV has a long timeline that people will be able to become retrained. So at this point, passenger AV has not displaced any taxi drivers or rideshare drivers or truck drivers at the moment. And we've been talking about it for over a decade. And I think there's still some timeline before any of that happens. And we'll have visibility when that happens, and people won't be out of a job tomorrow. And there'll be new jobs, retraining, et cetera. Some people will suffer, but some people will actually benefit greatly from added convenience and added productivity. Most of the time when I'm looking at investment, my personal thesis in autonomy isn't a labor replacement story alone. You're reducing labor costs, but if you're not increasing overall productivity at the end of the day and unlocking greater opportunity economically, what are you doing? Like, you're just competing with labor at that point, and no one wants to compete with unskilled labor. So when I look at a company or any type of technology, I'm not looking at it purely from a cost savings point of view, a labor cost savings point of view. I'm looking at, can this make us more productive in the long term? So I see, it's creative destruction. I think, I'll throw out some economic names to show that I have a PhD with, like Schumpeter, right? Like, it's creative destruction. Yes, some industries will be destroyed, but new industries will be created out of it, and hopefully, it doesn't have massive impacts. I think the greater question isn't technology; it's allocation of wealth. And I'll bring up, like, big in the news. Capital gains tax, highly relevant for us. But tax rates on capital versus labor, I think people should concern themselves with stuff like that, as opposed to like, will this robot take my job? I hope it doesn't, but
I also have a few thoughts. So I'm an econ undergrad, so definitely not as advanced as Jeff here. But I did one of my graduate theses on this topic actually, coming out of Stanford. But I think there's a tremendous equity and kind of equality impact to transportation. So transportation is I think it's a basic good. It's something that everyone should have access to. There's a lot of studies. There's one done by Harvard showing access to public transportation is a critical determinant of whether or not someone can escape poverty. So I think there's an equity question. Can everyone access autonomous vehicles? Because I think in the early days it'll be expensive, and therefore you'll have not to put it bluntly, but like Silicon Valley billionaires who get to have their own self-driving cars, and they're able to make better use of their time. And when I was in school, I met someone at the cafeteria who would commute 3 hours each day from where they lived in, I think in the Central Valley somewhere. And that's incredibly unfair, right? So, if we have 12 working hours in the day that's productive, you're already at a disadvantage because it's harder for you to access transportation. So I think there's definitely societal implications because transportation is so critical to all parts of our lives. On the UBI piece, I agree with Jeff. I think this technology can augment people in places. If you think about driving, 90% of it sucks, right? You're sitting in traffic on the 101 and you wish you were anywhere else but there. Like, I wish my 2010 Dodge had autopilot in it because I'd rather be doing something else. But I think it's an interesting topic to think about, especially with AI and robotics. If we believe in 200, 300 years that a robot or an AI can do most of the things we humans can do, maybe even better, then that warrants a discussion. But I think in the short term, I don't think autonomous vehicles are that close that they'll be displacing that many jobs in the short term. And there are opportunities to kind of think about, restructuring the way people work, right? So in trucking, for example, rather than having truck drivers go, from one city to the other, a 20-hour drive, having a hub and spoke model where the autonomy system, does the easy long haul parts, and then the truck driver does the last mile kind of more complex roads, and other things like remote operators. So I think there's a creative destruction there for sure. But losing one's job is always painful, and it's an interesting discussion to think about how can we support that and ease that transition for folks.
Thank you. So here's I think a question that I'd like to zoom out and maybe ask from a broader perspective or frame. So I'm going to read the question and then I'm going to reframe it or try to reframe it so we can kind of get an answer that might be applicable to a wider segment of the audience. So the question is about, safety, risk analysis. Do you price in or do you think about, safety to pedestrians, safety to other, folks within the warehouse, wherever the vehicle is operating as part of your ROI calculation? And what I want to do is zoom out and just maybe have you all talk about the risk analysis that you do when you make an investment, whether that's on the technical side, the execution side, the side that you see for liability, and then also how that assessment maybe changes through the life cycle of the company, right? So really early stage, you're just trying to get technology up and running to get a proof of concept done, right? You're not necessarily worried about running over a pedestrian, but as the company. So anyway, I don't want to answer the question for you. Martin, do you want to take a crack at it, or?
I can try.
Okay.
Yeah. So again, like that, it's a pretty broad question. The way that I would say we approach this is that there are this is in some ways, there are existing bodies that put out regulation. There's functional safety certification bodies that are well established. And so again, when I think about those things, I think about components rather than the full system, right? I think when it comes to AVs as a whole, and my guess is that the person that asked this question was some way, shape or form probably thinking about Tesla, right? That there is this vacuum that you have to kind of go through when the technology is just happening faster than regulators can respond with putting up regulation, or even just understanding the types of risks, right? And I think that we are frankly still in that, maybe not a vacuum, but it's not a well-defined space, right? No AV company today knows what KPIs they have to hit in order for them to basically put cars out on the road, right? And so the DMV grants these licenses. Yes, there's still safety drivers. Yes, do accidents happen? Absolutely. We see that in the media, and it's always picked up, obviously, very, very prominently if it was, either a self-driving car or a Tesla that was kind of used as a self-driving car, even though it's not intended to be used like that. But again, my general sense on this is that this always takes time. There's always these periods of time where technology is advancing so quickly that, in order to keep developing it, you're going to have to enter these white space areas where there's not all questions are answered yet. And the way that as an investor I would think about it is actually that ROI and this risk are somewhat related, right? If you were to invest in an AV company that has very poor kind of safety guidelines and processes in place, the risk for them to have a significant reputational damage is enormous, right? And so that risk directly translates to your ROI. So I wouldn't even say that those are completely unrelated. There's a connection between the two. And so obviously there's also other reasons why you should try to make sure that companies that you give money to follow certain processes and at least care about safety enough, right? That they put the safety of pedestrians and generally humans first. But again, there's actually also a case to be made that ultimately also translates into your expected value of this company, because the higher the risk of them going bust, the lower the ROI.
I don't think I have anything to add to that answer, Alex or Jeff, and if not, maybe we'll get ready to close out.
Yeah, I mean, in the absence of when we have ambiguous regulation, and we're at such an early stage, these companies aren't even at that stage yet, and for the most part, you look at team and you look at culture. Are these people going to make big sacrifices in order to advance faster or not? Or are they going to be pursuing safety first? That's really the only way that we can evaluate at such an early stage.
Well, terrific. Well, I think this about concludes today's panel. What I'd like to do again is allow each of you to just provide your contact information and any final thought if you have one. Otherwise, we'll wrap things up. So, Alex, we'll let you start first. Contact information and.
Yeah. Oh, I actually forgot to put it in the chat, but yeah, no, it's an exciting space, and I think the entrepreneurs who are building companies in the space, absolute heroes, and it's a tough journey, and with high out there. But yeah, I mean, I have absolute respect for folks like Oliver from Voyage who are kind of taking this journey on, because I think the payoff is incredible, right? Being able to change the way people move, live, and work, and yeah, I'd love to speak to any founders. I'll put my email in the chat, but anyone who's building something in this space. And you can find me on LinkedIn. It sounds like there's a few Alex Lees on LinkedIn, which is fair. It's a common name. But if you search on Venture Partners, Alex Lee, at least for now, is only one of us, one of me. So you can find me there.
Terrific. Jeff?
Yeah, so feel free to send a deck our way. I mean, working in transportation is super rewarding because it permeates all of our lives. And working in the in technology in this space, I think can have a huge impact. So hopefully this was interesting for everybody.
Wonderful. Martin, you want to bring us home?
Sure. Yeah, no, I can just second that. Was great to have this. Happy to talk to anyone that's innovating in this space. Yeah, you can just Google for Hella Ventures, then you will get to the website that also has our contact information. That's probably the easiest, or you can find me on LinkedIn or at martin.rudigier@hella.com.
Fantastic. Well, I want to say thank you to a great panel today, Alex, Martin, and Jeff. It was very informative. Great points, counterpoints back and forth. I want to thank our audience today for attending, and I want to, of course, thank Idea to IPO for organizing today's event. I'm Jason Putnam Gordon, startup attorney and venture capital attorney with Bolsonelli. LinkedIn is a great way to contact me, and I also keep office hours should you want to chat. Until next time, we'll let you guys get out there and build your great companies. Take care. Bye-bye.
Bye.